since gold was at 2000, you and I said that it was going to 23, 24, 25, 26, and now maybe next 27, because anything they cut will spike inflation, whether it's 25 or 50, but 25 is expected. And now there may be a talk of 50. If 50 basis points gets cut, that says that they're admitting that we're in a recession, that there's a problem. And if they go to 75, that's the end of the world. And I would suspect that no matter what the numbers come out as, the markets are going lower after the announcement, whether it'll be less if it's 25, because that's expected, but it's already really been priced in. I mean, we've been pricing it in. It's going on a year now, Danny. Last October was when we're going to have all these rate cuts, which propelled these markets higher. If they go 50, I think the markets get clobbered.
Gold was at $2,000. And we anticipated it would rise to $2,300, $2,400, $2,500, and possibly higher, even to $2,700, but not yet $3,000. A rate cut will spike inflation, whether it's 25 or 50 basis points. A 25 basis point cut is expected, but there's talk of 50. The cut is 50 basis points. It signals an admission that we're in a recession and facing bigger problems. A 75-point cut would be disastrous. Regardless of the numbers, markets are likely to drop post-announcement, though the decline may be less severe if the cut is 25, as it's already priced in. Todd Horwitz, a financial analyst and commentator, tells there are rumors that central banks have been buying gold, contributing to its rally. Once the expected news is out, gold may see a slight sell-off, but that's normal market behavior. The key is whether gold continues to stair-step higher or collapses. Gold still looks strong, with potential to reach $27 or even $3,000 by year-end, as people increasingly view it as a needed currency due to concerns over fiat currency devaluation and rising debt. Similarly, silver also seems poised for a big move, possibly into the mid-30s, and could hit the $40s if panic ensues, though a new all-time high isn't expected yet. Concerns over the global monetary system are driving demand for alternatives like gold and silver. Central banks worldwide, including in England, manipulate their currencies by creating new money. This mirrors a Ponzi scheme, where new money is created to cover old debt. Despite this, countries struggle to keep up with growing debt, posing a serious problem for the global financial system, including the U.S. Federal Reserve and other central banks. Meanwhile, the growing demand for silver and solar panels highlights its industrial importance, but silver is also seen as an investment and potential currency alternative. As a lower-priced metal, silver could be needed for smaller transactions if metals were used as currency. This investment push could drive silver much higher. However, Russia is navigating sanctions by accumulating wealth in US dollars and converting it to gold, recognizing the instability of the fiat currency system. This strategy helps mitigate inflation driven by debt and currency devaluation. Let's dive into the video for more insights. If you enjoy the content, don't forget to give us a thumbs up and subscribe to our channel for the latest updates.
There'll be some selling coming in, but certainly the rumor is that the central banks and banks have been buying up a lot of the gold, which is part of the rally. Everybody's got to remember one thing, okay? The old story, buy the news, buy the rumor, sell the news. Okay, or sell the rumor, buy the news. The news is out. We already know what they're expecting. So more likely, gold would probably see a little bit of a sell-off. And again, not that that's bearish for the market. We have to remember that markets go up and down. I think gold looks tremendous, and I think it's got a good chance to see 27, 28. And it would not surprise me if we got to 3,000 by the end of the year, because I do think that people are starting to realize that gold may be needed as a currency again. This is something that we talked about last time. And again, the destruction of the currency around the globe, the phony, manipulated fiat currency system, which has no backing, people are starting to get concerned that they might not have money to spend because the money is really worthless when you think about it. And of course, they continue to make such massive debt. So gold is becoming more in play because it may be needed as a currency as well as silver. And I think that silver is about ready to make a big push as well. And you know, I don't make big, bold predictions, but certainly I would expect silver to get into the mid-30s now. I look for the 30s. And I do think we're going to get into the mid-30s if we can get some action. We're right now about 31. And certainly there's a chance if we get a panic, it could get back into the 40s. I don't see a new all-time high yet in silver at 49. But again, I do see it continue to rally because I think people are genuinely worried that there is a potential that we may need a currency alternative to the dollar or wherever you are, because I think the central banking system is trying to make it collapse. But England's got a central bank. Everybody's got a central bank that is involved, that is manipulating their currency. This is the problem because they have the ability to create new money And of course, if you recognize the definition of a Ponzi scheme, you create new money to satisfy old debt, which is what we've done forever, but we can't seem to catch up to the debt. And this is a very, very big problem when you look at our central bank, our Federal Reserve, plus the central banks around the globe. The markets already know what the amount of silver that's going to be needed for these potential solar panels that they're talking about. And I think of silver, although it is an industrial metal as well, I also think of it more as an investment vehicle and a protection against. And of course, that would go to my theory that you may need metals for a currency. Well, you would need silver because it's a smaller price metal. You're going to need some change, right? You got to make change. I don't know how they're going to use the amount tender, the cashiers now, but you're going to have to make some change. And I do believe that, again, the industrial part is already pretty much priced in. It is really the investment part, what we're waiting for, and waiting for that big expansion of silver that's been really stuck in a range for a couple of years here now. And is finally starting to try and break out to the upside. But again, remember, markets are so smart and so efficient right now that they are much faster at recognizing that industrial use is already pretty much priced in. And of course, it hasn't created a massive rally. What's going to create a massive rally in gold is that, or in silver, is that new money will come in and realize that gold has silver as a better value, and more than just for solar panels and more than just for industrial use, but actually for currency use. And I think that's what will really be the end that will push silver much higher. Well, I think that Russia is being very prudent and very smart and ahead of the curve. As President Biden and others try to push their rhetoric and about sanctions and things on Russia because of what's going on in Ukraine, they're just continuing to sock in the dollars and make a fortune throughout all of these things that we continue to hear that they're not doing well. And of course, they're making all this money. They're now turning it into gold because they also realize that the fiat currency system itself is really false and is not a very good system, because when you have nothing that backs your currency, all you are doing is creating massive amounts of debt and reducing value, which obviously creates higher inflation.
The speaker, Todd Horwitz, doubts claims that Russia's gold strategy will dethrone the US dollar, noting that currencies are backed by the government's credit, which is why the dollar rises in times of crisis alongside gold. Despite rhetoric about alternatives like BRICS nations adopting new currencies, the US dollar remains dominant as the global reserve currency, and the speaker doesn't see that changing soon. Todd Horwitz points out that Americans have been spending more than they earn for years, with spending consistently outpacing income. Credit card debt is at record highs, with many maxed out and unable to escape due to high interest rates. The government, benefiting from inflation through increased tax revenue, supports policies that perpetuate this debt cycle. They're pushing for rate cuts to keep borrowing cheap and sustain this system, which the speaker sees as a failing Ponzi scheme. Todd Horwitz also criticizes the ease of borrowing due to government policies, leading to financial troubles for banks and a high level of consumer debt. They argue that government spending, like student loan relief, is funded by taxpayers and creates dependence on government. They also claim that under the Biden administration, a large portion of job growth has gone to illegal immigrants and government positions, while manufacturing and productive jobs are lacking. The speaker advocates for reducing reliance on government and increasing real job creation. Let's get back to the interview.
One of the things you have to remember is that currency is supposed to be backed by the full faith and credit of the government that it's represented, which is why dollars flow into the U.S. dollar when there is problems. You see the U.S. dollar rise along with gold. And again, I think that the rhetoric we hear from around the country is really nonsense, because, of course, we are more of the supporter to many of these countries and helping them survive as you go back to NATO and the other things that we're looking at. So there's a lot of lip service when we talk about it. But at the end of the day, until the dollar gets replaced as a reserve currency, and I don't see that happening anytime soon, and that it means nothing. We've heard, how long have we heard about the BRICS nations switching over to a new currency? And yet here we are, the US dollar is still king dollar, as they say. Well, if you look at the PCE, Danny, we've been spending more than we've been making for years. Okay, again, this is not news. This comes out every month. The PCE deflator shows the income increase versus the increase in spending. And the spending has always been above the money you're taking in. Plus the fact that you have, again, the dollar amounts are hard to justify, but the amount of people that are at max on their credit card, okay, paying the minimum, is at a record number. It's never been there, again, that are maxed out their credit card. Yet they still spend and they don't care. And of course, when you're paying those usury rates for credit cards, which is 25, 26, 27%, You can never get out of debt. And of course, we know that the credit card lobbyist is so strong that they got the ability to go bankrupt on your credit card. Again, you cannot bankrupt yourself against credit card debt. So you have a government, an administration that has created the ability for people to go in massive amounts of debt. And of course, now all these people are stuck. So they need more federal spending. And of course, the government continues to want inflation to go higher because they need the tax dollars, because the tax base and the Ponzi scheme that they're running is starting to fail. And they're starting to panic a little bit. And this is a problem, which is why they're so hard on trying to get these rate cuts down, because they need to create more new money at lower rates. The suppliers through government has made borrowing so easy. Again, we forget that there's so many banks that are in trouble now because of their over lending and going past their fractional banking laws of 10 to 1. But you go to the store, they give you credit. You go anywhere, they give you credit because again, a store or a lender doesn't have to collect from everybody. They only have to collect from about 40% of their borrowers to make any money, and they make a lot of money. So the real problem is they're giving accessibility, and of course, we saw what President Biden tried to do with student loans, and we've heard Kamala Harris talk about giving money away for this, giving money away for that, giving money away for that. Well, that money's got to come from somewhere. And what people don't understand is it's coming from you. It's coming from the taxpayer. Government makes no money. They make debt. Okay, they don't earn anything. And of course, if we go back to the jobs created in the Biden administration, 66% of the jobs went to illegal immigrants. 33% went to Americans, and half of the 33% went to government jobs. We don't need any more government jobs. We need people we need production, we need manufacturing. We need people that can make real money doing real things and real jobs. And this is the problem that they're creating with all of this debt and making money so easy to get to, because really what they're creating is a dependence on government, which we need to get away from a dependence on government, because the Federal Reserve or the federal government was never meant to be the biggest employer in the world.
The current economic landscape highlights the ongoing tension between inflation, debt, and monetary policy, with gold and silver emerging as key assets amid global uncertainty. Staying informed about these dynamics is crucial for navigating the evolving financial markets effectively. How might a 50 basis point rate cut impact the gold market and overall inflation compared to a 25 basis point cut? Share your thoughts in the comments below. We'd love to hear from you. If you found this video useful, don't forget to give it a thumbs up and subscribe for more content. Thanks for being a part of our journey.